All right, so before I start this video, if you don't have a broker yet or you're considering switching over to Robinhood, please use my affiliate link in the description below to sign up because Robinhood is currently running a promotion where we'll both get a free stock if you do. And of course, that'll help me out and you'll get a free stock as well. So please do that and thank you. Okay, so how to read a stock quote. So the most common mistake that new investors make is that they believe that the stock price or the share price is the value of the company. So if a company so Apple's at 307, but say a company's like Tesla is at almost 800, then Tesla must be worth more. And that's far from the truth. So what you want to look at for the value of the company or the value of the shares outstanding anyways is the market cap. So if you scroll down a little bit, you're going to see the market cap. So Tesla's currently sitting at 148 billion. And then if you go back to Apple here, we're sitting at 1.33 trillion. So Apple's company or shares outstanding are worth a lot more than Tesla. Okay, so the stock price, the way it's set is how it just depends on how the shares are fractioned off, and sometimes companies will fraction them off further, so more people have access to them. But if you buy one stock that's at 150, two stocks that are $150, you still own $300 worth of stock, or you can buy one stock that's $300. Okay, I hope that's making sense. And soon, anyways, Robinhood is implementing this feature where you can buy fractional shares. So if you want to say invest only $100 into a company like Apple, you'll be able to do so. Okay, so the stock price at that point really will be pretty irrelevant. All right, so again, the stock price doesn't really matter that much. If you want to invest $1,000 into Tesla or Apple, whatever company, you'll be able to do that soon without even looking at what the price is at. Okay, so let me see if I missed anything on market capitalization. So market cap, again, that's the value of the shares outstanding. So say if you wanted to buy Apple, I just don't want to skip over this part. So if you wanted to buy Apple, it'd be $1.33 trillion to buy it. So yeah, good luck. Let's move on. Okay, and just really quick so I don't forget, if you set your stock chart to 1 day, you'll also see some other numbers below the share price. So there's a dollar amount for how much the stock moved today. So Apple's down $1.83, and if you want to look at the percentage of that, it's going to be 0.59%. And then after hours, so after the trading period for today, some brokers will have this feature. Apple's down 0.6 or 64 cents, right? Or 0.21%. However, if you go over to 1 month or whatever, then the after hours won't show simply because it's not on the day, right? So let's move on to the actual chart itself. All right, so stock charts, reading stock charts. So let's go through this. If this thing will open up, piece of crap won't work half the time. Okay, so stock charts. So that's obviously the graph here that plots the performance of the stock that we're looking at for us. Okay, you can easily change the range of what you're looking at by pressing these little buttons. So I can go to 1 month, or I can go to 1 year, or I can go to 5 years, however you want. So, and then if say you go to 5 years, at the very top, it will actually give you a percentage of how well the stock is done. So Apple's up 141% for the past 5 years. It's pretty good, right? However, if you want to get into more technical analysis, there is this little button on the right here of the range where it will give you some bar graphs and some volume bars and stuff like that. But it's very small, it's hard to look at, and it's not particularly helpful. However, if you get on your web browser and log into Robinhood, you get a much more feature-rich chart where you can you have access to more technical indicators. Okay, I'm not going to get into this today simply because this deserves a video all on its own. Very time consuming. So yeah, just subscribe and I will make videos on this. Okay. All right. So moving on to the stats. There is going to be some stats here on the side, on the left-hand side, and some on the right-hand side. The ones on the left are pretty straightforward. And the ones on the right, I'm actually going to go through individually because they go a little more in depth. Okay. So on the left side, you have the open. So that's what the stock opened at today. You have the high. So that's the highest that the stock was at today. Then you have the low. That's the lowest the stock was trading at today. And then you have the 52-week or annual. You know, there's 52 weeks in a year. High. So it was the highest it's been this year is in the last year is $327.85. And then the lowest is $170.27. Okay. So pretty easy. However, the ones on the right, we're going to go through individually. So let's get started with volume. All right. So volume is the number of shares traded on that given day. It's good to have high volume because it makes buying and selling stocks more quote unquote liquid, meaning faster. For example, if you trade a high volume stock, your order will be filled almost immediately during market hours. However, if you trade a low volume stock, then you risk trying to buy a stock at market value and your order being filled at a different price at a different time because there's not enough people buying or selling it. Penny stocks are notorious for this, where blue chip stocks or large market cap companies like Apple are traded much, much more frequently. Personally, I try and stick with stocks that have at least a few 100,000 people trading it a day, but I much prefer this number be in the millions. Okay, so I know I said I wasn't gonna show any technical indicators, but I do want to show you this really quick regarding volume bars. So you see here these two really high volume bars. Typically, what that suggests is that a big institution is buying or selling the stock. See, as you can see, we had this huge drop off here and we have this huge spike in volume. So maybe some big news broke out where a lot of people started selling, or a big institution decided to dump their shares. And there was a lot of volume the other day, so the stock had a lot of attention those 2 days there, right? So I just wanted to show you guys that really quick. And then the average volume is based off of what the average volume has been for the last 52 weeks or annually. All right. So that's volume. Let's move on. Okay. So I'm actually going to skip the PE ratio right now and come back to it after we go over the dividend yield and earnings. That way everything will just kind of tie itself together. So dividend yield, it's the percentage of the payment that's usually paid out every quarter from a company as a thank you to its shareholders for owning the stock. Not every company has these, but it's a great way to add to the return on our investments. However, like with anything else, there's a downside to this. For example, if a company is paying dividends, it's probably already well established, mature, and past its growth. Companies that are pushing for growth will typically reinvest that money into the company instead of giving it to the shareholder. Okay, so annually being, just so this is clear, so the dividend yield is 1% on Apple, or 1.07%. That means through the entire year, even though they paid out quarterly, through the entire year they paid their shareholders 1% for owning their stock. Okay. All right, so let's scroll all the way down to the earnings section. All right, so earnings per share is an indicator of a company's profitability. So the graph below shows how much money this company made per share. The bright points being the actual and the more transparent ones showing what was expected. So higher earnings suggest better value because investors will pay more for a company with higher profits. It's also a great way to see if a company is growing or not based on the trend of those earnings. You'll often see investors talk about earnings season because it's basically a report card for a company's performance. Sometimes analysts will try and forecast and anticipate what the earnings will be. If the company beats those estimates, then that's good news and vice versa. However, stocks can grow even if they don't have great earnings because investors foresee them having them in the future, i.e. Tesla. Okay, so now that we know that EPS lets us know how much money a company makes per share, now we can look at the PE ratio, which makes it'll make interpreting this data a little easier. So let's scroll all the way back up to our stats. All right, so PE ratio, we skipped it earlier. So PE stands for price to earnings, or price to earnings ratio. This is a fundamental analysis tool that compares the stock's price to the company's earnings. In essence, it indicates the dollar amount an investor can expect to invest in order to receive $1 of that company's earnings. So a PE of, say, 24 means you need $24 for it to gain $1. A higher PE may suggest that the company is expensive at its current price. A lower PE may mean it's inexpensive. However, sometimes a high PE could also be justified in the sense that investors expect growth in the future of the company. Side note, if you're going to use this tool to evaluate companies, you should usually compare them to its competitors within the same sector. So let me show you an interesting example of that. Let's go to Intel. So Intel builds CPUs. If you're a gamer or you understand the basics of how a computer is built, it's the processor. They build the processors within our computers. So these guys have a PE ratio of 11.18. Okay, over the last 5 years they have gone up 77.85%. That's pretty good, better than going down, right? However, if you go to AMD, their PE ratio sits at 125.92, and if you look at their chart for the last 5 years, they have gone up an astronomical 2,237%. So make what you will of the PE ratio. Again, it is a good tool for fundamental analysis, but it can be justified and interpreted in different ways. So moving on, right below that, you've got some analyst ratings. So Robinhood also has this pretty cool feature that shows a general consensus of how confident analysts at Morningstar feel about a stock. Then it also provides the argument and counter argument to that consensus. Note that bulls means people that have a positive outlook on the share's performance, and bears have a negative outlook. It's always good to get a few more opinions on your investment decisions, right? So right below that, we've got the research report. The research report, it's offered through Robinhood's Gold membership, which is $5 a month. Their analysts do thorough reports on some individual companies, and there is a ton to learn here. Now, you may disagree with their consensus sometimes. For example, Tesla's economic moat, or ability to maintain competitive advantage over its competitors, is rated none by Morningstar. However, other reputable investors like, say, a Kathy Woods, let's pull her up here, would beg to disagree. Okay, so if you haven't seen her videos, I highly recommend. She invests in disruptive and innovative markets and is just very interesting person. All right, the news. So that's pretty straightforward. It's just going to give you some articles related to the company that you're looking at. I can't stress this enough. It's really important to learn to check your sources. Many news sources nowadays are very opinionated, and it's hard to look past that sometimes. And last but not least is the About section. That's all pretty self-explanatory, so this is where I'll end for today. And just like in my last video, I'll try to keep my videos short and to the point, but informative. I won't sell out to the YouTube algorithm. However, if you're interested in any of my future content, please consider subscribing. Thank you guys.